I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday, so let's do a blog about investing, the proper mindset you're going to need for success, to retire early or retire comfortably with a decent income that you can do some things in retirement. You know, the attitude that you need to have, a positive, can-do, optimistic outlook on things as opposed to the pessimistic complainers. And a lot of it is the media that's out there, the mainstream media, that just perpetually is putting out this negative narrative. Everything is broken. Everything and everyone is conspiring against you, whether that's to buy a house or invest in the stock market. Everything's going to crash. The day of reckoning is coming. Sell all your assets, sell your stocks. Homes are going to go down by 40 or 50% in the next 18 months. Interest rates, the economy, inflation, don't you know, it's going to kill all of us. And how I've told you for the last 10 years on my blog here, you've got to dial all that stuff out. Focus on what you have control over, which is earning money, saving your money, and getting your money working for you. And then tune out it's basically just entertainment is what a lot of this financial news is, and just the mainstream media in general. And again, 95% of it is negative. It's to keep you in that fear cocoon, keep you coming back for more, have you scared of everything. I've often said here that, we are living in a time where there's incredible opportunities out there. Better than it was 20 years ago. I know I still have those people that think it's a lot harder now than it was when I started out. I get a lot of comments in my blog here when I talk about, staying the course, especially in the volatility we've had lately in the stock markets here. And people will say, well, it's easy for Owen to have the diamond hands and hold on and buy during the dips because he's got a huge portfolio and he's got all the cash dividends coming in from his holdings that he just keeps putting to work. So it's easy when you've got a $5 or $6 or $7 million portfolio. Well, yeah, you're right. It does become a lot easier. But how do you think I got here? How do you think I got a large real estate and stock portfolio? I didn't do it by getting spooked by some amateur economist on YouTube, and I didn't get spooked by listening to these idiotic mainstream media guys that know nothing about what they're talking about with real estate or investing or retirement. That's how I got to the large portfolio in real estate and stocks. I did it by just buying quality companies, quality Vancouver real estate, staying the course, dollar cost averaging. Whenever I got new funds, I'd put it to work. Get my money working. And I understood right from day one, thanks to a lot of incredible mentors I've had over the years, that it's not going to be a straight ride up. If you want the superior returns of Vancouver real estate or the S&P 500 or the NASDAQ or the TSX, there's going to be some bad years along the way. And we're going through one of them right now. As I speak, the S&P 500 is down about 22% year to date. NASDAQ's down even worse. TSX not as bad, but we're down about 10%. It's probably going to be one of those down years for me. We'll see. We've got a lot more time to go for 2022. Market could go into a nice rally here in the second part of the year. But every 3, 4, 5 years, I get these down years where my portfolio's down $200,000 or $300,000 or $400,000. Same thing in Vancouver real estate, where my holdings go down. I don't pay much attention to what my real estate values are at. I pay zero attention to it, because I'm either living in the home as my principal residence or I've got a tenant in there. What the value does year to year or month to month is, of little concern to me. I'll have a look at it when I'm ready to sell the home, and when the property's been paid off, clear title, and by that time I'm probably going to be up 200 or 300 or 400%. So I want, that's the big thing that I keep saying that trips up people. So I was listening to a Tim Ferriss podcast. As you guys know, I'm a big fan of his. He was talking about the stock market and the volatility and how he invests. And he said, a book that made a big difference for him was The Phycology of Money by Morgan Housel. And if you guys go back last year, every now and again, I'll do a book review. And I did a book review of The Phycology of Money. It's a fantastic book. And in times like this, a good book to revisit if you guys don't have it already in your library. If you don't, you should go buy it. Buy The Phycology of Money by Morgan Housel. It's going to teach you what you're going to need to do to create financial security. And that's going to be buying high quality companies, the Apples, the Googles, the Johnson & Johnsons, and hang on to them, collect the dividends, reinvest. That's the only advantage you have. You're not going to do it as a trader. But Tim Ferriss brought up, just reminded me of a chapter in there. And in that book, Morgan Housel talks about you have to know the game you're playing versus the game that the guy on CNBC or Bloomberg or some guy on YouTube who has a channel saying the day of reckoning is coming for stocks and sell, what game they're playing. So for Morgan Housel and for myself, I'm an investor. I'm not a speculator. I'm not a trader. You guys know the type of companies I own, and you know the real estate I buy. I buy the best, I hang on to it, put tenants in it, and just keep it. You know, the game that these guys on CNBC and Bloomberg and Fox Business, they're playing a completely different game. They're in the entertainment business. They deep down in private, they're probably buy and hold because they know that's the only way you can make money. But of course, for entertainment purposes, they're going to tell you to buy this, sell that, get out of this, hedge that, short this. It's just purely entertainment. Brings up another point. I read a couple of articles recently, and I've talked about this many times, about doom and gloom, pessimism, fear is what gets clicks and what sells. All the newspapers, all the TV channels, CNBC, MSNBC, CNN, the constantly negative network, and these tens of thousands of YouTube channels talking about the stock market and real estate. We've got them in Canada talking about the local Vancouver market, and then there's literally thousands of them talking about the NASDAQ and Bitcoin and the stock markets in general. Most of them, 99%, are worthless, the information they're giving out. It's strictly fear-based to get clicks. And it talked about there's a number of companies right now that for $99 will give you a little workshop on how to make money in YouTube. And how you make money in YouTube and how you get clicks and get attention to your YouTube channel is to hit them with something negative, something fear-based. The day of reckoning is coming. The stock market is going to crash. Real estate is headed for a major correction. They even went on to talk about it's all like a paint by numbers type course. It's the same thing. They'll tell you how to do, the important thing is the headline you put on your YouTube channel, and then they also tell you what kind of photo to place in the video. And it's all the same thing. The big one they love is the one, the hands up to the face here. And he went on to show about 50 websites, YouTube channels, that all had the same photo of this. They all use the same title. They have the one with the hand over the mouth, or this one. It's all the same. Go and check it out for yourself. Go in and put in stock market crash or real estate market correction, and it'll bring up all these idiots on YouTube that have no idea what they're talking about. But that's not the purpose. The purpose is to get you to click so that they get the advertising revenue. And that's the same way that Bloomberg works. Remember the dust-up I got a couple of years ago with Bloomberg about the day of reckoning is coming for Vancouver real estate? And looking back 2.5 years later, how wrong that was. They would have had you sell that detached house because COVID was going to wipe you out. Nobody was going to be buying real estate. Meanwhile, that detached house is up $500,000 now, like I predicted. But this is what sells. Fear sells. That's what gets clicks. That's what's going to sell the newspaper clicks, because the printing business is done. But it's about getting clicks, and the clicks have to be something negative, a call to action to get you into that fear cocoon. Ignore it. That's the game they're playing. You have to understand the game you're playing and the game they're playing. The game they're playing is to get a click to make some money off you. The information they're giving you is a joke. So keep that always in the back of your mind. And I was glad Tim Ferriss talked about that and reminded me. I'm going to have to reread the book in the summer. But there's some real gems in there about the stuff that I talk about on my Saturday blog. Buy quality companies, index invest, buy more when the market's down, buy, hold, buy your principal residence, maybe down the road, buy an investment property, put a tenant in it, let the tenant do all the heavy lifting. And then tune out all the noise that is out there. Because it's not going to do you any good. And again, it's a bit of a a facade, a sham that these guys are running with these doom and gloom sites. They're not giving you good quality information there at all. The whole goal there is to simply get clicks so they can make a little bit of money off you on the ad rolls. That's what it's all about. I tell people, in the past, if you guys know, I'm a pretty positive guy because I only focus on the long term. What buying Vancouver Real Estate, what buying Apple and Google and Johnson & Johnson and the VIG and the S&P 500 will do for you over 10, 20, 30, 40 years. You're going to make nothing but money. In the short term, all bets are off. There's always going to be pullbacks and drawdowns. But it shouldn't bother you. That's the price you pay for the superior long-term returns. Dial all this other stuff out. Focus on people you trust, people that are playing the same game you are. And that's hopefully as an investor saving for retirement, not a speculator or a trader. Finally, my portfolio has been pretty heavy hitter, as I've been telling you guys before. But it's not as bad as a lot of people I see on Twitter. A lot of these guys are heavily into tech names, meme stocks, Bitcoin, ETF, what are those? EFTs or NFTs, total scam. They're losing their shirts on these things. I've got some tech stuff that's been beaten up, some good quality names like the Apple and the Googles and the Meta and Microsoft. But of course, that only makes up about 15% of my portfolio. Apple is my largest position, but I've got a lot of money just in the S&P 500, the Triple Q, the VIG, and then I've got a lot of just high-quality dividend pairs, the Canadian banks, which have barely been touched, Coca-Cola, Pepsi, Philip Morris, Johnson & Johnson. These companies have been hit, but nowhere near what the tech stocks have, and they continue to pay me a fat dividend every 3 months. So it insulates you a bit from these downturns, and the dividends help you stay the course. It's called portfolio construction and putting together a proper balanced portfolio. And you guys should too, and all the information is out there. And there's incredible resources out there. Great books like Morgan Housel's Phycology of Money should be a must read, especially in these tumultuous times that we're living in. Stay the course, don't panic, and for God's sake, tune out these losers. That's what they are. These YouTube scammers, that's all these guys are. They're trying to get a click from you to make a little money, and they're going to try and get you to do something dumb. And that dumb is selling your house because you think the market's going to go down and rent for a little while and then buy back in. Great idea. Pay all the friction costs, the commissions and the PTT and everything else. Dumb. Sell your stocks, buy back in cheaper because the market's going to crash. Markets are going to go down. We could go down 15, 20% more here in the S&P 500. It would still be less than what I've gone through many of these. My portfolio was cut in half in 2008. And we just had a major correction 2.5 years ago, March of 2020, that was way worse than what we're going through now. This is kind of a slow death by 1,000 paper cuts type correction. The COVID one was far worse. Stay the course. Know what game you're playing here. You're not a speculator or a trader. You're an investor. Put the money to work and then call it a day. Enjoy your life and tune out all this negative stuff. It's a waste of time. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.